So we typically do these mid-year reviews actually one-on-one with each of your teams in person, and due to the environment this year, we were forced to take it into a virtual world. So we're doing it as a group this year, which is very exciting for us. And we have a lot to go over, both with the market and with both funds and their performance, as well as some of our projections. And then we'll have 2 guest speakers coming in. One manager from Fund 1 that we've had a long-term relationship with, Graycroft Partners. And then we'll have another manager that's out of our Fund 2 portfolio called Material Impact coming in to present. And really just a high-level overview on the funds and also the partnership that Cintrifuse brings. Just as a quick logistical review, everyone is muted by default. So if you do want to ask a question, just unmute yourself, or we will be taking questions as we go. So you can use the chat function that you should see at the bottom of your screen. I'm sure by now everybody is super experienced in Zoom. So there's just a chat button down at the bottom. You can press that and it asks the question, and we'll see it and can help respond as we go. There will also be some time at the end for Q&A. So we can go through that then. So I think in lieu, Ian, is Pete on?
I don't think so. I just got a text from him though, so he's joining very shortly.
Okay, so let's do this. Let's talk through the markets first, because there's a lot to update on the macroeconomic trends that are currently going on. So we did an initial call with many of our LPs shortly after quarantine, just to talk about what the venture community is experiencing right now. It's changing, of course, it changes every 2 weeks, and it's very difficult to keep a firm grasp on how the venture community is interpreting what's going on right now. You all know our fund team fairly well, myself. We also have Francisco on the phone with us, Ian and Allison, who will be helping us today. So on a macroeconomic basis, we have been expecting a drop in deal volume, and we'll go through some of the data on this. We have also been expecting a drop in valuation of deals. Now, this has been very spotty. The volume drop has been much more pronounced than the valuation drop. And we'll talk about how that's affecting late stage versus early stage. So deal flow has taken a hit just because during a pandemic, many VCs cannot meet in person because they cannot travel, or choose not to meet in person. What this means is to get deals done, it has to be a very opportunistic structure. And VCs are doing many more reference calling to try to validate deal teams, to try to validate experience and things like that. We have seen a lot of startups turn to debt financing. This is part of existing investors not wanting their startups to go to market due to down rounds. And it's also entrepreneurs who don't want to take dilution and unfavorable terms in this type of environment. VCs, and I think that this is where we're trying to get a grasp on an ongoing basis, is VCs are really trying to monitor what is going to be lasting, what is going to be pronounced from a market trend perspective coming out of the COVID crisis and some of the social unrest. VC is a long-term asset class, and a lot of VCs truly believe that the behavioral changes that are happening now, many of them are going to stay with us for decades. And so those are the bets that we're seeing them make, and we'll go through some of those categories and how they're shaping out. Notably in the VC market, and this is predominantly in the late stage market, there's about 3.5 years worth of dry powder still to deploy. The fundraising market going into the end of 2019 was very robust, and because of that, VCs have significant dry powder. We have seen a pullback on the rate of spend of this dry powder, right? So they're being very conservative in how they're thinking about spending. they have it, but they're holding it. So that's why we're seeing deal value drop quite significantly, deal cadence drop quite significantly. The IPO window has been quite surprising. So we initially thought the IPO window was going to slam shut. And by and large, it has for most types of deals. However, we have seen a resurgence. Obviously, the stock market has been fairly robust compared to the macroeconomic trends, but we have seen a resurgence in certain life sciences companies, for instance, breaking out, and certain companies that show a very clear pathway to profitability or may already be profitable, being able to go out and IPO. So it's not quite as closed as we thought it was going to be initially, which gives us a lot of hope, right? As long as the stock market remains robust, we may see some additional IPO exits. M&A, we believe, and if we look back at what happened during the financial crisis, M&A makes up the lion's share of exit activity. It's unfortunately opportunistic M&A. So for many of the corporations who are looking at acquisition targets, the fortunate part is that you're now seeing those valuations come down. And we have started seeing a lot of opportunistic investing on behalf of corporations across the country. The unfortunate part is that means that anything that does exit through M&A activity in this type of environment is likely going to see a smaller multiple than it would have otherwise. Now, we'll go through kind of Fund One's Q1 results, which actually were quite robust and surprising, but I think that we should expect moving forward to see those exit multiples come down. And then strong fundraising in first half. We have all, as LPs and my peers included, been waiting for the fundraising market to slow down. We have not seen it yet. There's still projections that the fundraising is going to slow, but we're hoping to see that in second half. Really quick on early stage venture. Impairments have been uneven, and this continues to be the case. Some VCs are taking early impairments as a conservative approach, and some VCs are just waiting to see what happens through the end of the year. Acquirers, we discussed, are focusing on very opportunistic transactions. There's also, as I mentioned, the strong delineation of categories between those that show tailwinds like food and gaming and those that show headwinds. When we work with startups at Cintrifuse, our advice is that if you are in a category that shows headwinds, fundraising in this type of environment is going to be incredibly challenging. However, conversely, if you are in a category that's showing strong tailwinds and you have a good COVID story, raising in this type of environment can be much faster than expected. We have seen a divergence of data from China. They showed increased venture volumes. Those volumes have started decreasing again. We have not seen a parallel cadence in the US venture market to date. And most VCs continue to tell us they don't plan to travel. They are slowing down their deal flow. And then, like I mentioned, valuations are declining, but they're declining at different rates. So the initial thought in the VC community was that VC valuations would decline by about 30%. We have not seen a significant decline at the early stages yet. We've seen a slowdown in deal flow and deal making, but we have not seen a significant decline in valuations. That can change as this becomes prolonged and startups are forced to go back to market and raise capital. So as I mentioned, we did try to find some projection data. PitchBook does have some data available on projected valuation decline. So what this represents are valuations over about a 15-year period and projecting into the end of 2020 and 2021. It's about a 20% decline going into this flat period in 2021. The over under here is significant though. I think it's fair to say that nobody really knows. And then, as I mentioned before, when we look back into the financial crisis, M&A was the predominant method of exit. However, if you see the valuations here, M&A at that time was significantly depressed. from a valuation standpoint. So we anticipate something similar happening here. So let me, did Pete make it on now that we've gone through that market overview?
Believe so. I think I see Pete here.
Hi, I'm on. Sorry about that.
Hey, Pete, good to see you. No
Yeah.
problem. We just jumped forward and kind of went through some of the market analysis from a macroeconomic perspective, but would love to hand it over to you to go through some of the Cintrifuse overall update.
Sure, terrific. Thanks so much for inviting me. And first off, thanks for all the support that you provided. We wouldn't be able to do all the things that we're about to talk about without your commitment and support. And I mean it sincerely that it's never been more important for our startup ecosystem. So thanks for your partnership. And I hope that this meeting leads to some creative thinking on how we can unlock further value together. I wanted to open with a bit of an inspiration just to kind of get you thinking about the possibilities of what we can do together, both through the fund, innovation services, our connection with startups. And I thought yesterday and the day before was a great example of what Cintrifuse is capable of doing in partnership with our, our valued partners like yourselves. We worked in concert with P&G on their signature event called Signal. And this is their attempt every year to drive external focus within the organization. They know that to really get to that step change level of value creation, they have to bring the outside in, and they've had a big event. And starting last year, we started to experiment with them with a model where we said, hey, maybe we can create a win-win. And we had a big event, a parallel event at Union Hall where we streamed their event and we created a bunch of workshops. And it was very, very successful. And then this year, of course, we all had the challenge of, oh my gosh, we can't use Union Hall anymore. And so we put our heads together and said, okay, well, how do we turn that into an opportunity? Do we need to think differently about collaboration tools? And we decided to do it again. We created something called the Signal Startup Experience, and we leveraged that amazing feed that they had with, fantastic speakers like the CEO of Twitter, Snap, Twitch, Sheryl Sandberg from Facebook, and we streamed that in. And then what we did is we basically had like 300-400 people from our startup ecosystem enroll. We invited 25 startups to do a virtual exhibition. We had over 24 fantastic workshops on everything from minority empowerment to raising funds to seed capital, you name it. And then we were able to use the tools to do one-on-one meetings, kind of like speed dating. And I think we got, well over 100, one-on-one meetings, the types of things that in the analog world, we would, eat up a lot of time to kind of make one meeting with you. And so, and it was really successful. And I think it's a really good example of how we are constantly thinking about how to turn the adversity, the challenge into a big opportunity. I've always believed throughout my career leading digital that digital is a vitamin to help companies work smarter, to bring external focus in. And we're going to do a lot more of this. One of the things that you're going to hear more from us this year is that we're not going to be deterred by the fact that Union Hall is closed or under capacity. We're going to turn this into an opportunity to kind of make more connections, to give our startups more visibility, and hopefully make it easier for you to make connections, because we know that you're really, really busy. And but we want to kind of create that spark that we know that you need to, grow your business in the right way. So again, that just took place, and all of that was recorded. If you're thinking, I don't believe you, Pete, we have it all visible that you can take a look at. Okay, let's move to my next slide. So everybody asked me, have things changed in the light of the crisis? And I would say, boy, our purpose to ensure the economic vitality of Cincinnati is more important than ever. Our mission to build a strong tech-based innovation economy is more important than ever. And our vision to be the #1 startup hub in the Midwest is more important than ever, because startups are going to be key to the recovery. And we're already seeing that across all the different sectors, healthcare, future of retail, and the like. There are some things that are fundamentally new for us, and they're not different than what I'm sure all of you are dealing with on a regular basis. But we've obviously got, huge challenges. I've had many huddles with the board on how do we fill revenue gaps, because Union Hall is obviously challenged and you're not having your offsites over there. But it's also leading to some really interesting things. So for example, we are playing a leading role in the restart effort around the economic development. We've been given the chairman role of the Restart Supply Chain and Logistics Committee, and we're going to be cranking out some really, really powerful recommendations, and I'll get to that in just a moment. We're putting much more focus on pillars. You've heard from us talk about 4 big pillars. We're down to, we're mostly focusing on one broadly defined. And then not surprisingly, we've always said, at least rhetorically, that we're committed to female minority entrepreneurs, but we are really going through a bit of an introspection on how do we really make that real, whether it's the fund influence or the startup empowerment or innovation services. And we hope to work with many of you in partnership on that. Now, let me kind of double click on just a couple of these. Go ahead. So recall we had, when I first took this role, we said, we got to get focused. Let's pick a few areas to win. And we focus on future branding, retail, connected health, InsurTech, and supply chain logistics. I think the 2 areas that have really bubbled up in the light of, around the restart effort that most of you at the CEO level are kind of involved in is health innovation and supply chain and logistics. And we're really trying to think through how do we turn that into a massive growth opportunity. We know that supply chains in particulars have been kind of challenged in the environment, but we're also seeing a kind of a renaissance in thinking about localism, radical transparency. A lot of thinking around sustainability has been given kind of an extra lift. And so there's going to be 3 committees that some of you on this call are part of already, but there's a big one on capital formation. How do we step change capital formation in the region? There's another one on health, which Mike Venerable from Syndiccate is chairing, and then one on supply chain and new commerce that I'm chairing. And just to kind of give a taste of what we're thinking about here, if you flip to the next one real quickly, so our restart charter here is, just moving little photos here. So we put together a pretty A-list group of experts in supply chain. Again, many of you are represented, but we've got, obviously the airport, P&G, Kroger, Cintas, DHL. We got a couple startups that are kind of reinventing the game, and we're huddling already to kind of think through, how do we develop a pipeline and capitalization strategy for, economic growth that leverages, regional assets and supply chain new commerce to really step change job creation and incremental investment. And I don't have time to get into the specifics. It's pretty darn exciting. And it's fairly inclusive because supply chain, as Sarah will tell you, is a pretty big tent. We've got a couple related events that I just want to tease you about. We're doing a big conference on radical transparency coming up. Love to get you involved. Maybe you're interested in sponsoring. And we're focusing on radical transparency because we think one of the interesting areas where Cincinnati, Northern Kentucky has an advantage is that there's a big trend in seeing through the supply chain to what's, are they putting their hands on the product? Is there responsible support sourcing? Is there supplier diversity? And we think that's all translating at the consumer level. We want Cincinnati to be on the bleeding edge of that. For those of you on the banking side, there's also a huge connection to banking because there's a whole fintech renaissance taking place in upgrading supply chains. Another related initiative we're super excited about that just got covered in the business couriers that we've launched with Flywheel and Kroger, a sustainability accelerator to really try to stir up the pot and kind of getting more startups in that area. And I think you're going to be seeing some really exciting initiatives. And if you click it once, I'll just kind of, a few other developments. We've got, we continue to evolve our board based on strategic need. I made a very deliberate attempt to lure Candace McGraw to our board. I think she is a game changer in the region. I think that narrative around CVG as the great supply way of America is just a monster opportunity that we can't leave on the table. And she's been really super involved. I think what I also love about CVG that I think should be an inspiration to all of you is that they work with 80 startups at a time. I mean, my God, how do they do that? You'll get a little bit of a taste of how you might do it through the case study in a moment, but you know, there's a startup spirit there and there's a growth story. So we've got her on board, but a few other names that are really helping us out. Just know that we're trying to get the right experts to the table to help us move as quickly as possible. Okay, you can jump ahead. The other thing I wanted to just highlight, we've also recognized, I mean, you've heard me say many times, I mean, our pipeline isn't big enough. We're getting great press, but we need more startups. And we not only need to bring people from the outside, but we need to build an earlier pipeline. So we launched this year a really successful, at least so far, program called Entrepreneurs Change the World. We're targeting high schoolers and college students. You may have some that are part of it. We doubled enrollment. We're bringing our best experts. We're leveraging the power of virtual, and it's going really, really well. One of the initiatives they're working on, for example, is to create a living memory wall, both analog and virtual. Here's an example of what Michaelman contributed. But they're going to be doing pitch competitions on sustainability, COVID-19, as well as social justice. So, and we're kind of hoping that if a high school or a college student is inspired by what they're experiencing with the ecosystem, even if they leave Cincinnati for a few years, they're going to know that this ecosystem is waiting for them when they're ready. I think I got one more slide here. I think the other development, and again, please, you take credit for this because all of you have created the conditions for us to have greater influence, you know, throughout the country. I recently testified, just 2 days ago, testified to Congress about what is needed to not only help, you know, small businesses, but, you know, this notion of we need to bring startup skilling to the whole, you know, economy to really help us, you know, develop greater agility, resilience, and the like. And, you know, I can share some of that with you afterwards. But the point I wanted to underscore is while we're trying to build a local innovation economy, we're really trying to make sure the world knows about what Cincinnati is doing. And I think we're getting more and more interest. This invite came from Congressman Shabbat. I've already been in contact with Senator Sherrod Brown as well. But I think the federal government is looking for answers. And I think they see a lot of the secret sauce in these great ecosystems like Cincinnati that are thinking differently, in part because of the way we forge relationships with all of you.
Great.
So that's my tea. Thanks again for all your support, and I'll jump in on a few of the other areas.
Yeah, absolutely. Any questions for Pete? All right. I don't see any, but since I'm sharing my screen, I can't really see my questions. So Allison Francisco, let me know if there are questions in the chat. I wanted to go ahead and introduce the corporate innovation team. Elisa Smith will be kicking things off for us. She is the Director of Corporate Innovation Services. Elisa, you can also provide a little bit of your background. And then Ian Frampton will also be presenting a few slides here. And then also on the phone, we have Mark, who is also a member of our corporate innovation team, a very important member of our innovation team, and helps us out a lot as well. So Elisa, I will kick it over to you.
Okay, awesome. Good morning, everyone. So yes, Elisa Smith here, and I have over 20 years of experience in corporate innovation, working at large CPG companies in Cincinnati. So that's me. We have streamlined our services into 3 different buckets that include reframing challenges, exploring solutions, and also building new ideas or ventures. And we also have our Innovation Bootcamp, which provides companies with specific sets of tools that they need to innovate quickly and more effectively. So these are the 3 buckets of our innovation services. I won't go over these in detail. If you could go to the next slide. Most recently, we're focusing in on 3 unique opportunity areas. This is where we're getting a lot of traction in unlocking innovation. We have had a big focus on gamification because it's a disruptive change in how consumers interact with brands, products, and services. We've also done numerous webinars and workshops focusing on the intersection of gaming mechanics, behavioral psychology, and consumer insights. So we're really, really excited about gamification and the opportunities that it brings to companies in the region. Moving on to contactless experiences.
Sorry.
Consumers increasingly expect minimal or no human contact with products or services, especially when it comes to selling, delivery, and transactional stages. And voice is one of the most critical starting points for contact-free branding. As a significant and growing percentage of consumers now use voice search to discover, purchase, and understand how to use products. So we're currently piloting contactless experiences as an audit with a major CPG company, and we're really, really excited about this. The audit itself will feed into new solutions, actions, and startup connections for that company. In addition, we're focused on future back to present forward, and this is really all about understanding how to lead in a VUCA world. And VUCA stands for volatility, ambiguity, uncertainty, and complexity. Recently, actually 3 days ago, Pete led a VUCA session with 400 employees from one of our top LPs. And this is really about helping businesses to enhance their clarity and agility as a way of future-proofing themselves. That's it.
Great. Thanks, Elisa. Ian, over to you.
Yeah. So quickly to go over the corporate innovation overview here. So kind of at our core, and what is our core for our business model, our strategic fund of funds, is to get access to technology to our corporates through our underlying portfolio. So with between two funds with over about 700 plus underlying portfolio companies spanning anywhere from back-end enterprise data needs to consumer brands to digital pharmacy types of companies to therapeutics, we need to ensure that we're getting a great pulse in what's inside our portfolio to ensure we're getting it to our corporate LPs in a timely fashion. So like I said, being investors into 33 funds across 19 unique fund managers is a lot of undertaking. So we're looking for efficient and better ways to find and leverage tools, processes, and outreach to both our venture network and our corporate partners as we're able to kind of host this space to act on new technologies and learning. So on one end, we are in constant touch points with our venture network on a monthly basis and providing them our corporate LP needs, so your guys' needs at a high level to do some scouting for new technologies, what's in our portfolio, as well as what's in our network. So that goes out to roughly about 150 partners. So it really helps and gets our word out there for what you guys are working on to make sure we're getting technology back to you. And on the other end, we also provide regularly scheduled touch points with our corporate partners. So those can look like monthly meetings and touch points. We also send out quarterly updates that coincide with our fund reports of new startups that are in our portfolio. So you guys have access to new technologies and be able to provide connections through that. So that's kind of how we do that. And that's kind of resulted just even in this first half, about 400 startups sourced and 100 plus introductions made. So we're seeing some good process going in through this and a lot of great output as well. And in the headlines quickly, just things that we are tracking, not something we take credit in, but it's great to see that companies like Duke Energy even participated in an investment into one of our portfolio companies, Zero Mass Water, who I'll talk on later, and you'll hear from Material Impact. They participated in that financing, and Billy was acquired by P&G in January of this year. So it's great to see activity in our portfolio.
Can I add some editorial?
Please.
Just, I want to make sure you don't leave anything on the table here. Ian is an absolute machine. I mean, he is like, more than a computer on steroids in terms of making connections with startups. Do not take advantage of that. He's getting really good at it, and you'll get a bigger taste of that with the AAA example. But he does what we're all about. I mean, we're all about being a matchmaker with your unmet needs or your need for inspiration, and this amazing innovation curve taking place reflected in our fund network and beyond.
Yep, I second that. He surprises me every time.
I appreciate it, guys. But no, like Pete mentioned, so this is a great example of what we've been able to do with a new corporate LP that's in our fund too. We've been leaning in heavily with them. It's kind of been an all hands on deck exercise and learning with our team and their team, but it's been great to go through what types of corporate challenges they are facing and on the offset, and being able to help stand up innovation teams with them. So being able to run through design sprint sessions, idea creation, different types of iterations across these spaces, as well as setting up, like you see here, 4 innovation focus areas to go forward and march through on a yearly basis. So it's been great to work in a really intense fashion on this. And as you can see in the bulleted points below, there's been a lot of activity. We've done 21 innovation brief scouting. So that could look anywhere from formal innovation briefs that have been pushed out to our network to high level interest areas and needs. But it's been very great to get insight onto what this LP is looking for and how we can help advance through the Cintrifuse model, not only through our fund, but also our great fund network that we've been able to build.
Thanks, Ian.
Mm-hmm.
And again, if anybody has any questions, please feel free to just send them over at any time and we'll field them as we go. So the Cintrifuse Syndicate Fund, we have 3 primary criteria that we are trying to solve for. The first is around performance, and we'll talk about that in a little bit. The second one is around corporate innovation, which Elisa and Ian just reviewed. And the third is around our regional engagement and regional attraction of VC dollars coming back into some Cincinnati startups. For this, we do this through a funding connections program is what we call it, just as a formal type of process. And we typically are working with anywhere between 4 and 6 startups at a time. Through this program, what we hope to see are some rounds, follow-on rounds, broader syndicates of VCs coming into the Cincinnati region. So one of the things that we do look at when we look at this progress is just the overall capital that's been raised within Cincinnati. Now, this is clearly not just Cintrifuse. This takes a village, and it takes a village of a growing venture capital community within Cincinnati. Cintrifuse is a part of that. Cincy Tech is also a part of that. We see new funds forming like Refinery Ventures or NARIA or Lightship Capital, et cetera. So with that emergence of new venture funds forming, we are seeing more and more venture rounds being consummated in the region. Now, a lot of this, you'll see 2019, this $214 million, a lot of this is very concentrated. So for instance, Syncore raised a $50 million Series A round. It was the largest Series A round in the history of Cincinnati. That was a historical accomplishment following Enable Injection's $30 million Series A round, which at the time, that was closed in 2017, I believe. And at the time, that was the largest Series A round. So we're seeing a building up and a maturation of venture rounds in the Cincinnati ecosystem, which is what we definitely want to see. As you can see, even 2012, about 8 years ago, we were only at around 50 million. So you're seeing the significant growth. Not there yet. We don't have enough yet, but we are definitely on our way. And Cintrifuse is proud to be a part of that. One thing that we are very proud of and did want to talk about is Vindley is a company. We've known Shashank Saxena since his days at Kroger. He actually was what we used to call our innovation champion for Cintrifuse while he was at Kroger, and we worked with him very closely in that capacity. He spun out and created a startup called Vindley, which was housed at Union Hall and was actually our first direct investment out of Fund 2. Vindley has been growing and transforming and scaling and has run into what I refer to as a champagne problem, where now they have significant institutional investors. We help them with their seed, very early days, where Bowery Capital out of New York and Epic Ventures out of Salt Lake City came in and participated in their seed. In their Series A, we saw Battery Ventures and Hyde Park Ventures participate. And they recently closed a Series B in which Madrona has come in to sit on their board. And this is a result of some of our more sophisticated venture partners coming in to offer their insights and expertise and network to some of our Cincinnati companies. And this is exactly what we want to see happen out of our venture network. We did review the macroeconomic landscape right now. We're continuing to monitor that with our GPs and with our network. So I will jump right into our Fund 1 overview. Fund 1 was, we made our final commitment in 2017. It's a 2013 vintage year fund. We have 17 underlying investments out of Fund 1. This does not include the 4 directs that we have. These are GP investments. And then underneath those GPs, we have still 479 underlying portfolio companies. It's still a very active portfolio. As we'll go through, we have seen some significant exits coming out of that portfolio. The performance to date on a net basis is a 1.4 total value. We've returned 30% of capital back to our LPs, and we sit at about a 12% net IRR. We have drawn about 96% of capital from LPs, and we'll go through some of the projections on what we think that remaining 4% will look like. The investors that we have committed to within Fund 1 should be very familiar names to most of you. They've been in and around the region for several years now. Allos Ventures obviously is here in the region. Graycroft you're going to hear from in a few minutes, actually. River Cities also is here in the region. Bullpen Capital is in San Francisco. They do post-seed. They're also investors in Navistone here locally. Mercury Fund, we've had years of a relationship with them. They were actually here before Cintrifuse as mentors to the brandery. Sigma Prime Partners is out of Boston. They do more enterprise SaaS related investing. Upfront Ventures is out of LA. Many of you have heard of their Upfront Summit, which we have taken several of our investors to. Lear Hippo is out of New York. They do seed investing and a lot in the consumer space. Atlas Venture out of Boston, and you'll see from our exit slides, Atlas has made up the bulk of that 30% of DPI I just reviewed. They are in the bio space and they do IP development. Pelion Ventures is out of Salt Lake City. Crosscut, again, another LA firm that focuses on seed. Techstars, you all are probably very familiar with. They managed the FounderCon here in 2015. They have a global network of accelerators. And then SB Health, the last one, is a Boston-based life sciences fund. So one of the things that we track as the maturation of Fund 1 is looking at the age of startups in the portfolio. And this is vastly different from what we're currently seeing in Fund 2, as should be expected. But the age currently is about 3.5 years old for startups. We only have 2 GPs that are still making initial commitments, and that's River Cities and Atlas Ventures Fund 11. So we have 2 Atlas Ventures investments in Fund 1. The second one is still making initial commitments. Otherwise, these startups will continue to age and exit. And we definitely have moved into the harvesting phase of Fund 1. COVID will affect the pace of harvesting, and we've already seen the pace of distributions slow down as VCs just don't want to exit companies in this type of environment. The makeup of Fund 1 from a categorical perspective remains fairly unchanged. The vast majority of the fund is made up of enterprise technology, and these are technologies that are in fields like data analytics, fintech, HR tech, and talent recruiting, and we have seen an upsurge in VR and AR types of technologies. We do have a fair amount in the consumer products and services category, and this looks at the end user. So these would be things that may be a direct-to-consumer type of product, or it may be a digital product that is sold to the consumer market. The vast majority of other categories is in the life sciences sector or potentially in other industrial sectors or accelerators, other vehicles that our VCs have invested in. So from a tracking perspective, we look at 3 metrics. We look at our DPI, which I just reviewed in the first slide, our TVPI, total value, and then our net IRR. And what we're seeing is there is a good tracking of these metrics. We're seeing a little bit of a flattening in this type of environment. But we do expect, once we are able to get through 2020 and 2021, for Fund 1 to resume its growth. The calls are naturally going to slow down dramatically. The distributions we also see in this first graph will slow. We have seen that already between Q1 and Q2. And I think until we can get to a better exit environment, that's a good thing for Fund 1. The total value, we do anticipate to flatten, although it should still continue to grow. It just won't grow quite as fast as new rounds occur and as new checks are still being written. We hope not to incur too many down rounds. Most of our GPs in Fund 1 do still have significant dry powder to invest and have protected reserves for existing portfolio companies. I think what we may see is a right sizing of portfolios. So it may be a selective shift and a flight to quality within the existing portfolios of our GPs. And then our IRR, we are expecting to decrease and decline slightly over the next 6 months to a year. And then as we see a resurgence in total value, that should follow suit. So Ian, over to you to talk about some of the major exits in Fund 1.
Yeah, so if we can double click into that DPI slide that Sarah was talking about, this kind of highlights some of our Fund 1 exit portfolio. So kind of just in a broad sense, there's a total value of about $1.1 billion from realized proceeds across about 180 companies that have exited out of our Fund 1 portfolio, which is great to see. And when we were doing analysis on this, we only saw about 20% of that invested capital completely written off, which is about $500 million of total invested from realized companies, which is expected in the venture ecosystem. So it's great to see that our portfolios are investing in the right companies with some of the right ownership. So I can dive into a couple of these. One to highlight, a couple to highlight, but one that I was interested in was Seriously, which is a gaming publishing company. It was acquired for about $280 million by Playtika, which is another gaming publishing company based in Israel. While it's not the largest exit on this list or notable in our portfolio aggregate, core to our fund strategy is investing into funds who obtain high ownership in their portfolio for higher upside for return profiles. Upfront Ventures acted on that and performed on that, and they owned north of 20% of this company, resulting in a really large distribution for them and us. So that was great to see. Another company that was recently exited was Giphy. They've been in our portfolio since 2014 through Lear Hippo, so we've been tracking them for a while. And it's great to see them get some uptick and acquired by Facebook. Currently being rolled out, kind of embedded into Facebook and WhatsApp chat features. So that was also great to see. And as Sarah mentioned, Atlas is one of our main drivers in that distribution profile. And they've had 2 recent IPOs from Atlas's portfolio. One, Akero, which is a clinical stage biotech company, engages and develops and commercializes the treatments of serious metabolic diseases. And then Repulune, which is a biotechnology company developing cancer therapies done on their platform. Both IPO, they're both clinical stage companies. They're performing really well. So it's great to see not only just exits to companies, but also companies that are IPOing.
Right. Yeah, I will say, oh, sorry, I was just going to say, out of these 10, Atlas has really driven a lot of our distributions. As you can see, 4 of these tombstones are from the Atlas portfolio. So life sciences has definitely had, life sciences overall as a category has had a really big surge in the past 5 or so years, and we're starting to see some of those exits come out now. So briefly on our direct program for Fund 1, we have 4 investments. Assurex was a successful exit at a 1.6 multiple, and that was back in 2016. EBTH, unfortunately, was a write-off, and that was acquired by creditors back in I think it was just this past year, late 2018, early 2019. We are still holding Enable Injections and Listener. Enable Injections continues to show very strong performance. They actually have not needed to raise additional capital. And so we do expect an exit to occur here in the next 2 or 3 years. Listener continues to track well in this environment and contactless experience, given their technology. This is a tailwind for them. So from a projection standpoint, you know, for Fund One, we have been saying we do anticipate some impairments in the Fund One valuation. Even with this said, we did experience a very robust Q2. So we have not been able to receive all the distributions back. Some of these transactions are still in the process of being finalized, but have been announced. So Mirror, which you may know of, is the workout mirror that you can have in your home, was acquired by Lululemon for about $500 million. This was owned by Lear Hippo Ventures out of New York. In addition, Fleet Smith was acquired by Apple Computers, and this was owned by Upfront Ventures out of LA. The transaction value here has not been disclosed publicly. And then Replimune, which we had on our previous slide, has continued to provide secondary or in-kind distributions, which we immediately liquidate and then provide to our investors. So between those three, we continue to track well, surprisingly well actually in Fund One with this environment. But we are anticipating, as this environment drags on, that Fund One will likely be impacted because most of the initial investments have already been made and the initial valuations have already been booked. So what we are hoping to see is a recalibration of Fund One going into 2021. For the most part, the GPs that we have talked to continue to provide reserves to the best companies in their portfolios, continue to support them. So we aren't anticipating too many of these companies going back to market until the terms in the marketplace resume. And then final slide on Fund One, just to try to level set calls and distributions remaining. We are here mid-year 2020. And from Fund One, we have on a net basis actually not called capital yet. So we don't anticipate having to call capital as long as we can fund those through the incoming distributions. And we're hoping to lessen the burden on any LPs having to fund calls through that mechanism. The distribution cadence will fall. We are hoping that once the market resumes, that we'll be able to play catch up on the distribution side. So this is our current outlook with regard to calls and distributions in Fund One. So with that, we wanted to present one of our top partners for Fund One. And Ian was actually just talking with some of their partners yesterday with one of our LPs. Greycroft has been, this is our third investment we've had with the Greycroft managers. They continue to execute very well, both on the portfolio development side, exits, and fielding a lot of our corporate innovation needs. And so we wanted to highlight one of their partners, Dana Settle, to give you an overview of the fund and what they're seeing in the current marketplace. Allison, is Dana able to make it on?
I'm on. Sarah, can you hear me?
Oh, hey, Dana, there you are.
Hi.
Sorry.
Hi. No, that's
you.
okay. Sorry. Just wanted to make sure. Great. And did you get the slides I sent over? Sorry, I know it was sort of late. If not, I can just.
Let me pull them up. Okay. I'm going to share my screen, Dana. Just let me know if you can see them.
Great. Perfect.
Okay.
Okay. So I will move through these pretty quickly because I know I have 10 minutes, but thanks very much for having me here virtually. I'm just for all of your LPs, Cintrifuse has just been a terrific partner to us. And really aligns well with our strategy because we do look for lots of opportunities to partner with corporations sort of all across the country and around the world. And so they've just been a terrific partner. A little bit of background on us. Our mission is to invest in the world's most promising early stage companies and really to be a full life cycle investor. So we start at the seed or Series A with our early stage fund, and then we invest all the way through full life cycle, so to IPO or M&A exit. And we have a flexible approach to our capital allocation, which means we don't have minimum ownership requirements. We don't have minimum capital that we have to put to work. And our only major restriction is that we syndicate 100% of the time. We really believe that it's important to bring a strong and diverse group of investors around every single company that we invest in. So that's been a focus literally from day one. We have two funds, an early stage fund and a growth fund, and early stage is seed and Series A. I mentioned growth is really Series B and beyond. Both underwriting target in the early stage is 10x on multiple on capital, and on the growth fund, it's really 5x, but with a 10x potential. And we've had a great track record with multiple funds in top quartile in terms of IRR, TBPI, and DPI, and many profitable exits. Yeah, actually, perfect. Okay, so our team, we have a great team of 24 investment professionals. Alan, Patrick Hoff, Ian Sigalo, and I founded the fund 14 years ago, and have built up a really incredible world-class team, really broken into three areas: investment team, platform team, and finance and operations. I talked a little bit about our strategy already, but we started from day one in New York and Los Angeles. And today, these are obviously two burgeoning markets. When we started, it was it was not so much in favor. So a little bit of a different strategy, and we've always invested in markets all across the country. So we're not focused on Silicon Valley, and we're not just focused on the markets where we exist as a fund. And we've built a really strong brand over the last 14 years. Partially, one of the benefits of being in markets like Los Angeles and New York is it's where a lot of the media is. So we do end up being, on TV, on CNBC, Bloomberg, et cetera, and it actually really helps to build the brand. I want to talk about our team because really that is our secret sauce. And we have an incredible team. Really, we've been diverse from a gender perspective from day one. We are really, our sort of up and coming team is really much more diverse across both gender and ethnicity. And so as you can see here, we have 6 partners, all of whom have now been at the firm for over almost 7 years. And Ian, Alan, and I have been here literally for 14 from day one. On the extended team, the next slide, our operating partners and platform team have really been something that we've built out in the last couple of years, and it's been a huge addition. As you'll see, it's really part of our overall strategy to not just source and select the best companies, but really to execute and help them scale. And Stuart Easterby and Allison Langangle, both are 2 world-class executives that we brought on, who have scaled, who've been involved in multiple hypergrowth companies with huge outcomes. Stuart, TrueCar, and before that, Overture, Yahoo, and Allison, Stripe, most recently, and prior to that, LinkedIn. And then Hannah and Allison Beck really operate in terms of helping our companies work well together, and then also connecting with folks like Cintrifuse and making sure that we're sort of plugged into all of the corporate networks. And then we have board partners who are seasoned executives and investors, and a really terrific kind of crack finance, legal, and operations team. So our strategy is focus on four things: sourcing, identifying, winning, and scaling. And I'll just walk through sort of how we do each of those things. So this is an example, the next slide, sorry, Sarah, of an investment theme. So two areas that we have invested sort of big, sort of thematically is sustainability and holistic wellness. And if you look at the companies that fall under those, companies in sustainability that are committed to building a cleaner, healthier future for our planet. Cloud Paper is a bamboo-based paper business or a plant-based paper business. Bird is an electric vehicle company, and Archer Air is an electric eVTOL, electric vertical takeoff and landing plane company. And so just to give you some examples, and then holistic wellness, this is really companies that are empowering individuals and families around physical, mental, emotional, and financial well-being. So again, sort of thematically, Thrive Market is in the natural organic products space. And what you might not think of being wellness, but Bumble is in the dating space. And it's really, again, about sort of mental, emotional well-being. And then Acorns is in the financial space. So sort of cutting across industries. And then the next three slides, I won't go into a lot of detail here, but this just shows you how we do deeper dives on different theses. So I kind of walked you through the high level themes, and then these are deeper dives on theses that we're currently investing behind. So consumer fintech, and we have had a lot of success in this area historically. And so we're really continuing to invest behind it. We were seed investors in Venmo, which we then sold to Braintree. We invested in Braintree and then sold the combined company to PayPal. Braintree, of course, was a Chicago-based company and a great outcome in the Midwest. And so we've continued to invest behind the consumer fintech thesis, but with specific lenses, as you can see in the bullets below. The consumer, next slide, sorry, consumer insurtech. And by the way, I'm happy to, answer questions if people want to go in deeper. I just want to kind of move through this.
Anybody
Okay.
should feel free to ask questions to Dana. She's here to answer those. But go ahead, Dana. Thank you.
Great. So consumer insurtech. So again, we've had, to date, it's been a newer thesis for us in the insurance area, but these are a few of the companies that we see as being big opportunities. Bright Health is probably the most notable, growing very quickly, also a Midwest company. And, we expect that it will be an IPO within a reasonable period of time. One of our venture partners actually is the head of corporate development there, and that was how we were introduced to the business. And that's actually out of our growth fund. We think we just see opportunities sort of across every category of insurance. Digital grocery, this is an area that we've been investing behind for the last 5 years. Clearly has seen significant significant growth, and probably sort of growth pulled ahead in terms of consumers moving online and shifting their grocery purchasing behavior during this time. And we have a number of companies that sort of play into those themes, as you can see below, ranging from actual digital grocery platforms like Thrive and Boxed to enablers like Shipt, which we sold to Target. It was based in Birmingham, Alabama. Mercado, which is a front end for independent grocers and farmers markets, etc. So that's sort of the, how we really sort of source and identify. And then in terms of winning, the Greycroft brand, I mentioned, we do go on television. We comment frequently in different news sources. We have events that we hold. We have an annual event, which is going to be virtual this year, just like this. And usually it's in the Hamptons. This year we're actually going to have it out in Santa Barbara, but it will be virtual instead. And next year we'll have it in Santa Barbara with it's usually about 100 of our portfolio CEOs, and then about 150 VIPs from industry CEOs, CMOs, and heads of corporate development from large corporations. And then next slide, this is another really important part as we've built out our platform team. We really do believe that we're stronger together and in working in partnership. So our companies, we are constantly finding opportunities for them to collaborate and to grow faster together. So through cross promotion, product collaborations, vendor or customer relationships, and distribution. And that's again where we think there's a big opportunity to be partnering through Cintrifuse with you all. And this is an important point, and it's something that we had in the works for quite a while, but we recently, a few months ago, launched a foundation. It's a small, very relatively small foundation, but we do give a percentage of our profits of the fund to the foundation, and then we match our employees' giving, and we give all of our employees an allocation to donate to charities that are important to them. And these are some of the groups that we have been backing over the last few months. All of this has resulted in us actually having a really strong portfolio. We've had 2 IPOs in the last year, the Real, which went public last year, just about this time. And we actually had an IPO in first week of June, Ika, which is a Chinese payment company. And it is performing well in the public markets in Hong Kong, and multiple multi-billion-dollar companies. And we expect we'll have more IPOs in the next 12 to 24 months. And just like with anyone, you probably want to hear a little bit of an update on what's going on year to date. We've had 6 exits for 160 million of gross proceeds, an additional 56 million that are pending. And we have a number of portfolio companies. I walked through some, but largely digital companies are performing well in COVID. And, we've just seen entrepreneurs across our portfolio rise to the challenge in really incredible ways. And have made some notable new investments. Bumble, I mentioned. OpenPath is a really exciting security company. Atom Finance, Citizen, which is also a safety app. And then we've had a number of large follow-on rounds across our portfolio.
Hey, Dana, can you just talk about, we have a question from one of our investors.
Sure.
What you're seeing in the current environment from a valuation and deal flow perspective?
Yeah. So, sorry, I have to put my phone down for a second. So we've definitely seen some rationalization, I'd say, sort of in pricing. I think that what's happening now that's interesting is the public markets, that valuations are soaring, and in the private markets, there has been a slowdown. And so, I think the result of that is some rationalization on pricing and valuation. And the best companies are still commanding relatively high values.
Okay. Yeah, we're seeing kind of the haves and the have-nots. Like some can
Yeah.
get through easily, and others are really struggling.
Yeah. But
any other questions for Dana? Dana, was this your last slide, or is it?
That was my last slide. Yep.
Okay. Any other questions for Dana? All right, Dana, thank you so much.
Okay.
The weather looks beautiful
Sure.
behind you, as I would expect in Southern California.
Yeah, I'm actually I have a walking meeting that I'm just about to go to. So, so that's
Okay.
Anyway, thank you.
Okay.
Thanks so much for having me, Sarah. And
Okay,
thanks for all your
absolutely.
support.
Take care.
Take care.
So I think what we will do, we're a little bit behind. We're gonna kind of fly through Fund 2 because we have another manager that we want to make sure we introduce to you. And I feel like getting our LPs to know our managers is critical. So for Fund 2, the short story here is Fund 2 is still very young. It's in a very good position right now within the market. We have only called about 20% of capital. So there's still a lot of dry powder, both for the fund and for our GPs, to continue to invest in this market, to take advantage of opportunities that start to exist in this type of marketplace. We're still within the J curve. So you'll see this 0.9 TVPI. It's just very early and we're still emerging out of the increased valuation accretions. And we wouldn't expect to return any type of distribution so early in the fund's life. So this is where we would expect to be currently. We have 12 underlying manager investments, including some new relationships, Atomic Labs, which we can discuss in a few minutes. You just heard from Graycroft. Bold Start is out of New York. Madrona Ventures is in the Pacific Northwest. Revolution Ventures is the Steve Case's fund and the Rise of the Rest out of Washington, D.C. Mavron also in the Pacific Northwest. And then this M here, this is Material Impact, and you're going to hear from them actually in a couple minutes. And then just notably, Atomic Labs is a venture studio. This is our first formal venture studio investment, although arguably Atlas Venture is also a venture studio. But they are in San Francisco and they develop companies from scratch. So from ideation all the way through exit. And we've seen that that model is significantly advantageous to both our corporations as well as to the region. So from a distribution perspective, categorically very similar to Fund 1. And then some of the top 10 value drivers. Ian, did you want to just briefly cover this?
Yeah, totally. Yeah. So like Sarah mentioned, we kind of monitor our top 10 companies or just top value drivers within the fund. So in lieu of what we did with Fund 1 around exits, Fund 2 being so early, we just like to track some companies that have had some early success. And a couple of them, one is Medley Labs from the Graycroft portfolio. So I think Dana might have hinted at it in the digital health space, but they even recently just raised $100 million Series B yesterday. So they're a full service digital pharmacy that delivers your prescription medication to you for free same day. So it's a great service in COVID times as well. Another company that might hear from, but it's out of the Material Impact Fund is Zero Mass Water. So they recently also just raised a $50 million financing to scale global access to clean drinking water for industrial, commercial, and residential applications. So it's great to see that company start to take some steam, and they've even come to Cintrifuse before in Cincinnati to present. So some of you might be familiar with them. And then UiPath out of Madrona. So they're the leaders really in RPA solutions. They also recently just raised $225 million with a valuation of over $10 billion. So it's good to see we have some strong names within this portfolio already.
And Ian just reminded me, this did not come up, I don't think, when Dana did her introduction, but Graycroft led the Everything But the House Series A round and then also participated in their Series B and C. It did not make it onto the most successful rounds that they did, but she is very familiar with the Cincinnati ecosystem.
It's a great ad.
So Francisco, I'm going to turn it over to you in lieu of time. Do you want to just maybe quickly brief them on some of these re-ups, and then we can jump to the projections before we talk to Material Impact? Is Francisco on?
Yes, sorry, I was muted. Yeah, absolutely. So the funds that we wanted to highlight here were Atlas Venture Fund 12. We made a $1.5 million commitment. As Sarah alluded to earlier, we're investors in Atlas 10 and 11 out of our Fund 1. They're really just some of our top performers in Fund 1 across all metrics, IRR, DPI, TVPI. The team is growing for this 12th fund. They've promoted Michael Gladstone to be a partner, and the team really just has a real history of success and diversified exits. Since 2011, they've had 15 M&A exits, 16 IPOs, and they're really just great company builders in this biotech and therapeutic space. The other fund that we would like to highlight is Atomic Labs. As Sarah mentioned earlier, Atomic Labs is a venture studio out of San Francisco. We made a $5 million commitment into their third fund. And really, we got to know the team, Jack Abraham and Chester mainly, and really just a fantastic team with great performance across their first two funds have been top quartile again across all metrics. The venture studio, it is something that we really feel could lead to a lot of opportunities with our LPs to really co-develop or partner, and really that's just something that we'd love to explore moving forward. And yeah, we're really excited for this partnership with Atomic. It's a fantastic team, and they're really doing great things.
We can skip this one since we'll hear from them.
Absolutely. And then we wanted to share some Fund 2 economic projections with you. Fund 2 has been invested a little bit slowly here in the first 2 years and remains largely uncalled. But as we saw with the financial crisis in 07, 08, times of uncertainty and kind of financial ambiguity like right now serve as a pretty good opportunity for valuations to reset and for some opportunistic investments to be made. So we feel like there could be net positives coming out for our Fund 2 as hopefully we emerge into more positive market settings here in the coming years. So we're really excited about the performance for Fund 2 in years to come. And just wanted to also share our call-in distribution schedule. Similarly to what we shared for Fund 1 earlier, except Fund 2 is significantly earlier in the life cycle. You can see that for the coming years, we expect calls to kind of remain on schedule as our investors continue to deploy and to really take advantage of the investment opportunities that are going to be present in the years to come. And then as the portfolio continues to mature and enters harvesting, as we progress through the 2020s, we expect distributions to uptick, but really just kind of early in the life of the fund, but headed in a very, very positive direction right now. Okay, so with that, I'd like to introduce the Material Impact team. So Material Impact is a fund that we have 2 investments in actually out of our Fund 2. They're some of the managers that we really love to work with. We're very excited about what the team is doing. They're working in the advanced material space, really working to solve some of the world's largest problems with some of the world's best technologies and really just some of the world's best educational institutions. For the second fund, the team at Material Impact actually grew. Sydney McLaurin and Karina Shen, who we have on the phone with us today, joined the team as partners for this second fund. We're very excited about them joining the Material Impact team and just very excited to see the progress of this team and what they're going to be doing moving forward. So with that, if Sydney and Karina are on the line, I can hand it over to you guys.
Thanks, Francisco. So I think Karina's here as well, right?
Yes, I am.
Awesome. We are really excited to be here. And so we'll take a couple of minutes and just go over the fund itself. So Corinne and I, as Francisco mentioned, joined in April. So we are fully ramped up at this point over a couple months with in the middle of COVID. And so we've been having a really, really fun time trying to figure out, how to work in the new normal. But it's been really great. I think our experience has been really good. And so I think you'll be really interested in the things we're investing in and what we're looking at. And so I'll dive right in. Francisco, can I actually share my screen if I have a couple slides, or I can just talk through it?
Yes, Sydney, you should be able to. I just stopped sharing mine. So if you push the share screen at the bottom, the green button, do you see it?
Yep, got it. I have it. And then
there we go.
All right, can you all see my screen?
Yes.
Perfect. So we did grow the team by 2 people. So you'll be familiar with Carmichael, Adam, Elise, Ken as the partners who were there before, and then Mark Little as the venture partner, who again was also there before. And so we added, so Corinne and I, as I mentioned, joined in April. And so we built out the team with a little bit more expertise around operational and late stage investments. And then we cover a couple different areas that we'll talk about during the rest of the presentation. In terms of the fund itself, so we essentially look at large unmet needs. And so the way we think about that is from a thesis level. So we start off with an overall thesis, essentially saying, we think we have a overall challenge within some particular area. And this will be very clear. We'll demonstrate this through the portfolio companies just because it's easier to talk about and differentiate from other approaches within the actual portfolios and things we invest in. But we look at basically an unmet need and at a very high level, and then sort of dive down into what are the key challenges and what are the key, I would say, inhibitors to success in that particular industry. And so one of them, we might look at and say, hey, one of the key challenges here is a technological challenge that could be solved by something where we could find a technology within a university. And so a lot of those challenges are solved by our university network that we then go and instead of pull out the technology, put a team around them, or invest in early stage technologies that are related to university technologies. And then we essentially have a couple options. If it's not a technology from there, we can also collaborate with large corporations. We can also look at tech from other sources, but having that early stage technology to be able to come in and be able to solve that gap between where we are trying to be and where we are now is really where we're looking at being able to bring that in. The biggest things in doing that, the quick to revenue part, again, the challenge here is always, making sure that you have a business that's scalable and quick to revenue. And so that's something where we are differentiated in doing this really well. Our team allows us to do that really well. We have a team of operators, entrepreneurs who are really good at building companies. And so we, at the time that we are getting into these companies and actually putting time into them, we are looking at them as a time where they are pretty close to revenue, right? So we're not necessarily working on just science projects or, sort of anything super early that doesn't have a path to revenue. And I think that's the key differentiator that you'll see in all of the companies that we'll go over as a clear sort of venture backable approach. And then the last thing about why we do it, materials technologies, again, it really cuts across all fields. And so, having materials, if you think of, pretty much any of the major innovations, right, they've been material based. And so if you look at, if you look at even like all of the stuff we do with software, right, like silicon was initially the item that allowed that to happen. And so again, we look at it that way of like, what fundamental changes do we see happening in the future? And so we are really doing it to try to enable those changes as we go forward. In terms of sectors, this is how we sort of break down our thoughts on the sectors. So food and water, transportation, healthcare, sustainable manufacturing, industrial productivity, and security. We think of, if you think of security, think of it as mostly on the data side. So data storage and data security, I think is probably the best characterization of our work in security. I only mention that because security can be very broad in terms of what it means. And so, we pretty much focus on sort of data security. So you can see two areas that we've spent some time there, again, and the portfolio companies that come after this. But these are the areas where we really think about. And so I'll bring this to light with a couple companies in water, and then I'll pass it over to Corinna to talk about some of the other companies that we're looking at across these different sectors. I'll pause here. Any quick questions before I dive into that section? Awesome. Well, I will dive into a couple companies on that sector. So the first one is water, and so you think of the one of the challenges within water. There are a ton of different opportunities for you to tackle it. So one of them we've actually tackled at zero mass. We've actually tackled it with being able to produce drinking water, right? So this is at a fundamental level, thinking about how you can actually get drinking water in areas where you don't have the infrastructure to have reliable or clean drinking water. And so the panel, the innovation here is a material that successfully competes and pulls H2O out of the air and allows you to to provide drinking water from essentially this solar panel and panel together with no need to connect it to an electrical grid, right? So this allows you a huge advantage in being able to do this in places where You don't have access to power. You don't necessarily have a clear infrastructure that you'd be able to do, and it allows you to do this at a way where it's much more modular. So say you need to scale it up or scale it down, you can do that without having to use a large infrastructure cost and being able to get that done. And so again, if you think of this side of the water challenge, this is on the creation side of thinking about how do we create water, quite literally sort of pulling it out of the air in places like Arizona, for example, thinking about it in those types of places. On the other end of that spectrum would be the recycling. And so infinite cooling is on the other end of that spectrum. And so infinite cooling looks at essentially the steam plumes that are coming out of large manufacturing facilities. And so, they are at this point, I think they're at about 25% of the water can be reclaimed that comes out of these plumes. And so again, they aren't necessarily creating water. They're going about it in a very different way of trying to recover as much of this water as they can. And they have, again, 2 pilot projects that are already in the works and that are already done. And so this just starts off to show sort of our thinking of water. When we looked at it from a very broad perspective to say, what are some of the key challenges? One key challenge was distribution, access to water, democratization of sort of access. And then one other challenge was how do you add more circularity into the process? How do you think about preservation? And so, when we think about other challenges there, right, cleaning, being able to think about other facets of water is where we're looking as we expand within this space. But this is just an illustration of how we thought about that. So with that, I will pass it over to Karina to talk about 6K Fusion and then a couple other interesting companies we thought you might want to hear about.
Sure, thanks, Sydney. Hello, everybody. To continue what Sydney has said, one of the focuses that we were looking at is also sustainable manufacturing. Today, manufacturing creates a lot of byproduct waste, and it's actually a combination of materials. It could be water, oil as lubricant, and other chemicals in terms of the chemical process. So a couple of our portfolio companies, 6K and Fusion, I'll talk more about that. 6K is basically additive manufacturing. It's named for the temperature of the sun, which is at 6,000 Kelvin. And this is a sustainable manufacturing method where we replace typical production process that's either a chemical process or a solid state process where you're known to have these water baths and these chemical waste streams. How 6K is able to accomplish this is using a microwave plasma technology. And unlike traditional manufacturing where there's many steps, a batch process where you can't really tailor to the quantity that you need, in each step results in contaminants and yield loss, and often can take hours to days to manufacture. 6K's Unimelt system is a continuous flow in just one step, and it can be done in seconds, and there's no waste created, no waste streams. And what you do is you basically put in the materials, and for applications in which you need high precision, tight specifications, it creates these best-in-class solutions in seconds while reducing energy use by 2/3 and creating no wastewater. Now, this here can be seen as creating premium powders for additive manufacturing, and you can see this as something where you add materials in to create the product that you need. And one of the things that enables this additive manufacturing is that the system actually doesn't take up a lot of space. It's only about 20 by 20 in size. And what this does is enables easy adoption amongst partner facilities where it's easy and cost effective. And so if you look at fusion coolant as a different kind of manufacturing, this is called subtractive manufacturing. Today, a lot of things that are manufactured, you take a large block of, let's say, aluminum, and it's basically chipped away and drilled away into the shape that you need. One example you can think about in terms of a artificial hip or an artificial knee, where you need basically a large solid form of material. And today, when you machine something, oil and water is sprayed into it, and you can see this in the photo on the left, where the oil is used for lubricant and the water is used for heat dissipation. Now, with fusion coolant's technology, there's basically holes in the drill bit that basically shoots out supercritical CO2, which cools the system and lubricates a bit, where you're able to manufacture and machine these parts without all the water and oil that you see sprayed around. So these machining systems are often in a enclosure with a robotic arm because of all the water waste and the oil waste. So if you think about how many things today are manufactured in this way, this is a tremendous reduction of water usage and oil, where it's otherwise extremely hard to dispose and recycle. And you can think about this in terms of needs where you need a very clean material made. So if you go back to the artificial hip or knee example, these are medical implants where you want to basically have manufactured in a clean environment to reduce contaminants and infections down the road. Any questions there? Great. We'll move on to a couple of other things that we're focused on, and one is healthcare. In the top two companies, you'll see NextGen and BloomerTech. Now, what we'd like to focus on here is basically allowing health data to be in more control of the consumers and making this more accessible. And one segment of that is basically femtech. Femtech is notoriously underinvested and underdeveloped, and it has been behind amongst general devices, medical devices, or drugs developed today. So one of the prime examples in terms of this disparity is development of cardiovascular tools and drugs. They've been tested on men since for the very beginning, and only recently have they actually include female participants in a lot of the clinical studies. BloomerTech aims to provide cardiovascular monitoring system with a multi-lead system that's flexible through a ECG brawl. If you are aware of what wearable EGCs look like today, there are these basically large block items or multiple leads hanging off of you, and this is a way to provide that information. NextGen is also working to basically provide insightful data on reproductive system through what they're now calling a menstrual. Unlike or very similar to a microbiome, this is really looking at what is found in the reproductive system and using their organic tampon and their diagnostic set. So today, as an example, a very painful condition called endometriosis often takes years to diagnose and involves several invasive procedures and the process of elimination, where oftentimes you don't know yet endometriosis until 4 to 5 years down the road. With NextGen's technology, you can get this diagnosis in a rather easy, simple format that can really help provide insight to, basically a large portion of the world's population in terms of women. And it's also a natural biopsy if you think about this. So this is a very good way to collect that kind of sample in which otherwise you would have very little insight and would require invasive testing. Moving on to data security, a couple of companies we want to highlight is Folio Photonics and DataCule, and they aim to kind of serve our data needs in different ways. So today, the data use is growing tremendously. In 2016, the world's internet had hit the need for a zettabyte. A zettabyte is 1 billion terabytes. And today, as you move into our use of data, data is king, and at this point in time, is essentially not deleted. And we look at the traditional form of data, what you see is there's this high performance need where it's on-demand data, and then there's archival data where occasionally you need access, and then deep archival. And that paradigm is shifting now that the world's transitioning also to artificial intelligence and massive collection of data, where you need data to be more flexible, but also to hold more. Folio's data system is focused on creating a material that is extruded multi-layers at the same time, so that if you imagine a Blu-ray disc that could typically hold a little less than half a gigabyte, about 300 or 500 megabytes, that you can go into multi-layer disk and start to hold basically thousands of terabytes. And this is something that we're looking at when you think about you needing reliable data. And this is the same for DataQueue through a different way to DNA storage, where you're thinking about perhaps deep archival data for long-term storage, where data persists and you're not looking at the typical degradation of magnetic tape or the high-speed performance issues of a rotating disk like a hard drive.
Hey, Karina, I want to highlight too that this Folio Photonics is actually a Cleveland-based company, and Material Impact is a co-investor with Refinery Ventures here in Cincinnati on this.
Right, yes. Thank you for highlighting that.
Yeah, and we're actually running a little bit over on time. So if you guys are okay with it, I'd love to see if any of our investors have questions before they have to log off and go on to other calls.
Sure.
Okay. And does anybody have questions for Karina or Sydney? Pete, I know you had a question.
Yeah, and this is as much Pete, the former Nestle guy, as Pete, the CEO of Cintrifuse. When I met with Carmichael and Elise at CES, they had introduced me to a founder of a company that had come up with a synthetic palm oil. And I was wondering, did that ever evolve? And if not, are you bullish on that technology? I think it's a game changer from dealing with a lot of environmental issues.
Right, great question. So actually Breakthrough Energy Ventures invested in C16 or C19, where they're focused on basically a synthetic palm oil. That is something, I'm glad you asked, that's something we're definitely focused on in terms of Fund 2 and looking at basically biomaterials and biomanufacturing. Can we use nature to leverage that? And so we're very active in pursuing that today, in terms of that exact example, whether it be palm oil for foods or textiles that are made more naturally as a replacement for nylon and others. That's certainly something that's in our wheelhouse. So to the extent that you see anything that may be a fit, we are really bullish on the fact that biomaterials moving forward is going to be basically the new wave of material science.
Thank you.
Karina and Sydney, thank you both so much for this. I know it was really, really quick, but I'm so glad we got to see you both. And if any of the other investors do have questions, please feel free to either ask them now, or we're happy to connect you directly with Sydney and Karina.
Yes, definitely. Feel free to reach out if there's any questions following this.
All right, great. Thank you both so much. Hope you have a great,
thank you, everyone.
Great weekend. Okay, so one of the things that we wanted to do, Robert, I would love to talk a little bit more about Venture Studios. I know we are over time, so please put your questions in the chat. We can follow up one-on-one, or if you do have time to stay on, we all do have time, but I just want to be respectful of everyone. So Venture Studios, this is an emerging asset class. Really what a venture studio is, a very broad aperture, but basically think about it's a venture fund that focuses on building. So they build from the idea to exit. So they're typically full life cycle investors. Atlas Venture is a really great example of this on the life sciences side. They take IP out of research institutions and they build a management team around that IP and they scale it and they exit. Now, Atlas is unique. They don't have too many syndication partners. They typically will fund companies by themselves until they exit. But because of that, they tend to have outsized ownership. So they'll own between 20 to 50% of a company when they exit. From a performance standpoint, that's very strong. Also, from the corporate innovation standpoint, when we have very specific and unique needs of our corporations, a lot of times there's not a market-based solution out there. We have to kind of develop it. And venture studios have a very strong bench of talent that they can bring into those problem sets to start developing solutions around them. And then the third aspect is, we've been talking to some of these venture studios about direct partnerships with the region. So if there were an opportunity to create a company that could align with the solution need of some of our LPs, can we bring them here? Can we help scale them in Cincinnati and in the region? So like I said, it's an emerging asset class. It's one that's very interesting to us for many reasons. And because of that, we've really started trying to investigate this landscape. Does that help?
Excellent. Yes, thank you.
Okay. Any other questions? Any way that we can be helpful as a team? We are trying to communicate much more actively, just given the changing market landscape. I know it's top of our minds what's going on in the venture world and what does the future look like. And so any information that we are able to get, we want to convey as readily as possible. With no additional questions, we just want to say thank you everyone for your time. We hope everyone has a really great weekend. If there are any follow-ups or if you want any information emailed to you, please just let us know and we're happy to provide it. Thank you, everyone. Take care. Have a great weekend.